Oh my God, the Federal Reserve is about to start QE very soon. QE, the money printer to pump all markets. Do you believe that's true? The people who are debating Pablo have been smashed down. Pablo has gone viral with this. Viral! I'm telling you, right? Look at this. This guy has been going against me, and look at this. I've now got, like 110,000 people viewing this and 1,000 likes. Look at this, 110,000, 1,000 likes. I said to him, no, bro, you got the chart wrong. Basically, people have been saying, this was an original tweet. They've been saying the Federal Reserve pumped $29 billion into the US banking system, the highest ever in 5+ years. So that's basically the highest since COVID. And this is a chart this guy posted, right, with 31st of October, Friday, and he said we hit 29.4 billion, right? And this guy has 2 million followers. 2 million followers, this crypto guy, right? But obviously he didn't know what he's talking about because Pablo smashed him. Pablo was like, kapow, kapow, boom, smashed him, right? That's why this tweet has gone viral. Pablo said, no, bro, you got the chart wrong. The Fed did not pump 29.4 billion into the US banking system. The Fed pumped 50.35 billion into the banking system yesterday. You are only looking at the treasury repos. See here? He's looking at overnight repo agreements, treasury securities purchased by the Federal Reserve, right? What is Pablo looking at? Pablo said, you're only looking at the treasury repos and forgot to include the MBS. MBS. Mortgage-backed securities, right? Here it is. Here is the real answer. So basically, you can see this was treasuries, 29.4 billion. He's not wrong. He's not wrong there. But what he's wrong is, on October 31st, 2025, there was also 20.95 billion in mortgage-backed securities that the Federal Reserve has bought. All up, it was 50.35 billion. Okay, what am I trying to say here? Basically, what I'm trying to say is, and the reason why this tweet has gone viral is because the Federal Reserve is panicking. They're panicking because the Fed has pumped $50 billion into the US market the last time banks were open, which was Friday, 31st of October. And the guy got it wrong. He said, $29 billion, $29 billion. Yeah, it looks pretty bad, looks pretty impressive. No, Pablo is saying 50. It was over $50 billion. And I can show you where that number comes from, okay? So for the folks who want to debate me, I show you the Federal Reserve Bank of New York, which is the most authoritative Fed bank in America. Like, I understand you have the Federal Reserve Bank of Philadelphia and of California and all those guys. But this is a Federal Reserve Bank of New York. If you go on their website, this is their website. Look, New York Fed, NewYorkFed.org, Markets Desk Operations /repo. If you go onto their website, you will see this, right? The mistake they made was they only looked at treasury securities, right? Hey, by the way, guys, I'm saying this because I'm trying to tell you that the Fed is about to do QE within weeks, like quantitative easing or money printing within weeks. Do you know how bullish that is? Do you realize how bullish that is? Yes, we could get a dip in between. We could get a dip in the next 2 or 3 weeks, but 4, 5, 6 weeks from now, we're going to get a major pump because the Fed is about to do QE, quantitative easing, money printing. And I'll tell you where the mistake those guys made. They might have 2 million followers. They might think they're red hot, but they got it wrong. What they did was this. They click on this button, Treasuries. So when you click on the Treasury button, do you see what the number is? 29.4 billion, because you're only counting Treasuries. You're only counting Treasuries, right? If you click on mortgage-backed securities and not include Treasuries, what do you see? 20.95 billion. 20.95 billion. But if you click on both of them, you see what? Total of 20.95 billion for mortgage-backed securities and 29.4 billion for treasuries. So all up, it's what? $50 billion, my friend. 50.3 billion dollars. That's massive. That's up what? Let me show you. Here it was like $6 billion if you add it all up. 6.75, that's called $7 billion. And here was $7.35 billion. Here was $8.4 billion, $7.75 billion, and $10 billion. And then suddenly we shot up to $50 billion. So we've essentially had like a 7x jump from 7 or 8 billion to 51 billion, well, $50.3 billion now. And that is crazy. Now, if you want to know how that affects the markets and QE and quantitative easing and money printing, then before we answer those questions, first let's answer the question of which crypto exchange does Pablo use? Well, Pablo uses exchange that's non-KYC. That means you don't need to show any ID. That means even the exchange can't see who you are. That means the IRS can't see you, tax office can't see you, FBI, CIA, nobody can see you, total privacy. That's why Pablo made this exclusive deal with them, exclusive Pablo Human Link, right? Trade to win up to $6,000 plus 2 ETH, whatever the price of ETH may be at the end of this trading period, and get 20% bonus in USDT every time you deposit. Deposit $100, get $20 US, right? Plus 4K of trading. Deposit $500, then get $100 US of futures bonus with 20K of trading, right? Some light trading. Deposit $1,000, get $200 US, 20%. You get the idea. Okay, limited time only, folks, because this deal finishes on 4th of November, midnight. And if you're watching this on YouTube right now, then basically just go. It's in the description below. It's in the description below on YouTube. But if you're watching on any other platform, such as this one, that's okay. Just click on the profile page and go straight down to my Stan link or link tree. We click on that, and boom, there it is. The first deal that pops up, Bitunix, and because it's a great deal. Okay, let's get back to the markets, folks. But keep in mind, this deal is only on the Pablo Human Link. Only on the Pablo Human Link. Okay. So, essentially, the mistake they made was they were only looking at overnight repos of the Federal Reserve. This is Philadelphia Fed, St. Louis Fed, sorry. And this is a Treasury securities purchased by Federal Reserve. You need to, this is the Fed's own website, and they showed what number is this? $5 billion, October 31st. But look, October 31st, $29.4 billion. $29.4 billion. So they're not wrong on this. Yeah, $29.4 billion. You can see on the screen right now, $20.94 billion. But what they're neglecting is that they miss the Federal Reserve Bank of New York website, which shows you everything, which is $29.4 billion plus the $20.95 billion. All up, it's $50.35 billion. What am I trying to say with this? Come on, guys. You know this. Like the amount of money, the US banking system is running out of money. It's like, I've shown you guys the chart. It's basically, what is this? This chart. This chart is basically, see this one here, WRE. That's the total reserves, WRES, total reserve balance in all US banks. And that number has now dipped below 3 billion. And RRP, reverse repos. Reverse repos basically is how much money the banks have to lend out. They had something like $2.5 billion, $1 trillion. The number has gone down to zero. And now, basically, the bank reserves have started going down from $3 trillion, starting going down to what is that, $2.87 trillion. And every time when you go down below 3 trillion, the market starts to panic, right? See, here's the key number here, 3 trillion. And when we go below that to 2.8, $7.86 trillion. Then banks start to panic because they run out of liquidity. When they run out of liquidity, then the U.S. Federal Reserve must lend them some money, and that's what they did. They lent out 50.3 billion dollars on the day. And guys, what I'm trying to say is this, and it's pretty simple. It means that the U.S. banking system is running out of money. I will say that again. U.S. banking system is running out of money. When they're running out of money, then Federal Reserve panics. Jerome Powell only mentions two mandates, and they call that the dual mandate. Every time when he's speaking to the world, he says, well, we have a dual mandate. Dual meaning two, meaning first, we have to control inflation. We all know that. And two, we have to promote jobs and economic prosperity in America. And we kind of know that as well. So he has to balance between jobs and inflation. But there's a third, number three, there's a third economic imperative or objective that the Fed has to hit, and most people don't even know about this. Well, I guess other than Pablo, there's maybe like about 20 guys who know about this. It's unwritten, but essentially the Federal Reserve has to maintain liquidity in all U.S. banks or maintain liquidity in the U.S. Treasury market. How did they phrase it? They said maintain the smooth function or normal operation of U.S. capital markets. So when your banks are crashing, when your U.S. Treasury bonds are crashing, then that's not called smooth functioning of the U.S. Treasury markets. Why am I talking about this? Well, you might think it's boring. Why am I talking about this? I'm talking about this because QE is coming, folks, because quantitative easing is coming. I used to say to folks, I said, oh, look, I think QE is coming in first or second month of 2026, and that's a big deal because if we got QE in first or second month 2026, then first quarter 2026, then that's an amazing move by the Fed. But now I believe, seeing the data of U.S. banks borrowing $50.35 billion on Friday, I think the Fed is going to run out of options very quickly. It's going to have to lend a lot more money, and it can't wait till first quarter, till January or February next year. It's going to have to do it in December at the latest, or November, which is this month we're in right now, kind of like pretty soon. Because, okay, it jumped like 6 to 7x from 7 billion to 50.3 billion within what, like 1 month, within 2 weeks. Now imagine in 2 or 3 or 4 weeks from now, it jumps another 7x. So 50 billion goes another 7x is 350 billion. Imagine the Federal Reserve has to lend out $350 billion to U.S. banks on a weekly basis. Okay, so I believe QE is coming latest in December, if not even in November, it's possible. And just for folks who are wondering what's happened to Bitcoin, this is one of the charts I've shown over this time, right? This is a price fractal. It hit what, 101.4 K here, and that's exactly what Binance hit. I'm not showing the Binance chart. I'm showing the MEXC chart. MEXC hit what, like 102.5, 1K higher. And then, right, the fractal shows us the next bottom is around this 105.8K, and we got the bottom at 106.4K. And then basically higher bottoms, higher highs, higher bottoms, and up we go. So that's essentially one scenario we have in mind. but it's not the only scenario. Okay, so for a another scenario is basically we used May 2021 crash, which is a lot more chopping and pinball-like action, and then basically we go down to something like 101k once again to flush out the longs at the lows, and then we make a major bounce and reach a new high. This shows it going to the 135s, mid 130s. So as we can see with this chart so far, with the the dip down to what is this 103.7k, we've had that dip here, and going up, it shows we could get to as high as 118k. We only got to as high as 116k, but it's a good idea to show the kind of price action Bitcoin is in. And people might ask and say, look, Pablo, what good is it? Is that if you can't show the exact highs and the exact lows, and if you can't predict the exact turning points? Well, what's very valuable here is that for all the futures traders, for all the perps futures traders out there, I would say that, look, I've called this to say that we're in a crab season. We're in a sideways season, and the range is roughly here. If we get to here, short it. If we go to here, go long or take out or close the shorts. If we go here, close the shorts, go long, we bounce. If we go close to here, close the longs and then go short. We go sideways. If this is a range, I'll say it again. We're in a range bound area for a long time before prices bounce up and then take out the new all-time high, right? So it's that I've already told you guys what kind of market we are in. But for the altcoin holders, I don't want you guys to be too bearish, because look, this is the monthly cap, market cap of others being all cryptos, altcoins, except the top 10. So you're not including Bitcoin, Ethereum, Cardano, and Binance, XRP, Solana, those guys. So these are all the mid caps and all the mid caps and some small caps, I would say. And when we look at this, right, we've had this big flash out here. See, big flash out, that's, see here, 4.29 trillion. It's basically hit the low of these lows back in August 2019 and these lows back in November 2017. And basically, we can see that the RSI of the monthly chart has gone down now to the lowest level pretty much in history. Lowest level in history at 36. Can we see that? Can we see that on the chart? Lowest level in history. So this chart shows others dominance. Others is basically, as I've just shown you guys, all the all the altcoins except the top 10. So basically mid caps and some smaller, some bigger small caps. And they basically, their dominance has dropped to same bottom level as was back in 2017, which is 8 years ago. And their RSI has dropped to lowest level in history. So I do think others are due for a bounce. That means mid caps are due for a bounce. Low caps are due for a bounce. And that means altcoins should do well if we get this Bitcoin bounce to the upside. And as I've shown you guys, Bitcoin has a decent chance of bouncing to the upside. Okay, thank you for your time, guys. I'll catch you next episode.